Hi, welcome to Neppy Invest. Today, I'm looking at a company called Scali. If you've never heard of Scali or know what the company does, may I suggest you get out a little bit more. So maybe do a little bit of exploring of your local neighborhood, go to your local shopping center. If you can't find a Scali, just expand your exploration area until you find a Scali, and then go into a Scali and you'll be able to see what they do. And at that point, you'll be one up on me because I've actually never been into a Scali store before. But they are a furniture retail group, and they are a growing furniture company who have been on the ASX since 2004. And today, on January the 5th, they've put out a very positive announcement, and that's seen the share price rise by 6%. So before I get into why the share price has risen, I just want to say thank you to everyone watching this video, because one of the added benefits of me doing YouTube investing videos is I'm starting to do more and more research on companies I probably wouldn't have looked at before I started doing these videos. And Scali is definitely one of those companies that I've decided to do a little bit of research on just because I wanted to do a video on them to put on YouTube. And as I was doing my research, I realized this is a really impressive company. And before I get into why this really impressed me, this company, let's talk about the announcement that led to the share price rising 6%. So if you know anything about me, you know one of the announcements I really like to look forward to or look out for is any sort of profit upgrade, earnings upgrade, because I believe that's a very powerful announcement, especially for the future share price growth in a company. Now, this wasn't exactly an upgraded profit, but they did give us some indication what the numbers were going to be like when they reveal their financial or half-year financial year numbers in February. So they're forecasting that their net profit after tax for this half year is going to be $40.5 million, which is an increase in the previous corresponding period of 100%. That's pretty significant growth. Now, what was even more impressive was that the written sales orders increased by 58% and were greater than delivered sales orders by $20 million. And what that means is they are expecting material revenue and profit growth to continue into the second half of the financial year. So if you had to ask me that Scali's increase in profits for this half year was just a one-off, but what I'm thinking is happening now is this is definitely a COVID-19 related issue. It's not really an issue, but it's a COVID-19 related thing. So I think what's happening now is because we are not allowed to travel overseas, so all these families have been cancelling their overseas trips for the year, not going to Italy, deciding not to climb Mount Kilimanjaro just because they don't have any choice. And so instead of spending money on those overseas trips, instead they're doing home renovations. They're spending money on new furniture, that sort of thing. And so Scali has been a beneficiary of that, increasing in home renovations and home furniture buying. Now, that means that sort of thing won't continue for the future. So I believe this could be one-off, and we won't see this sort of growth in future years. We could even see profits going backwards for a few years to go back to the mean increase in profit. So just keep that in mind if you are thinking of buying Scali, that this could be sort of a one-off, and maybe the market's going to get a little bit heated in regards to these numbers. But in saying that, it's still a very impressive company. So the ticker code is NCK. They IPO'd in 2004, so they've been on the ASX for quite a few years. Their market cap's been growing ever since then. Now it's up to $800 million. Revenue $263 million, operating cash flow $92 million. If you just look at that last number, the net profit after tax in the last financial year, $42 million, is almost identical to the forecast net profit after tax for this half year. So you can see a substantial increase in profits when you think that one half year is equal to their full year profit. So very exciting times for Scali shareholders and the company in itself, but just keep in mind, again, this could be sort of a one-off increase in profits. Now, why did I find this company impressive when I did some research? So there was a few things, and one of the first things was when I looked at their profit, revenue, operating cash flow, and market cap history over the last 16 years or so, And what I've got here is just each half year numbers. And what you want to see in this sort of graph is those numbers, those lines and those bars going from the bottom left to the top right. And we definitely see that with Nick Scali, definitely going from that bottom left to the top right. And exactly what I want to see. And that's a very impressive thing to see, that sort of thing happening in a company. Doesn't mean it's going to continue in the future, but there's no reason to suggest it won't. So another thing I looked at is I just looked at the compound annual growth rate of the share price, gross profit, revenue, equity, and operating cash flow. And what's even more impressive here is every single growth rate for each period. So I'm looking at 15 years, 10 years, 5 years, and 5 years using the trailing 12 months. So that includes the numbers they just gave us today. Every single growth rate of every single thing here is above 10%. That's exactly what you want to see. So the main things I look for here is share price growth, and I want to compare that to the revenue growth and operating cash flow growth. So whenever I see share price growth sort of be behind revenue growth, that's a good indication that share price is lagging revenue growth, and that means the share price could increase a little bit more before it gets in line with profit growth or revenue growth. So in this case, we do see revenue growth hovering around 11% or so, and share price growth is just a little bit more than that. So I don't think this is undervalued at all. And the other thing I like to see is compare operating cash flow growth to share price growth. And we've definitely seen operating cash flow growth going through growth spurts. And it's actually, in fact, it's increasing through time. In the last 5 years, operating cash flow has been growing at 37% per year. And that's suggesting if they can start to increase the bottom line or increase their margins, and the margins actually are pretty impressive on the right-hand side there, that more and more of that money going to the operating cash flow will go straight to the bottom line into profits. And we're starting to see the profits starting to increase as well. You can see that going from 11% to 19%. So what that's suggesting is because the profits and operating cash flow are growing at a greater rate than share price, I believe there is still room to grow for the share price moving forward. So even though some people might say this is at all-time highs, the share price right now, there is still room to grow for the share price to catch up to profit and operating cash flow. So don't be surprised if the share price goes up even further from here. And one of the reasons why we're starting to see we're seeing the profit and operating cash flow growing at a greater rate is the operating and gross margins actually increasing year on year. And that's what I've included on the right-hand side there. Now, something I actually didn't mention there in that previous slide, one of the other things that's really impressive about Nick Scali is when I looked at their return on equity, which was above 50%. It's very rare to see a return on equity for a company above 50%. And the other thing was, I think it was return on capital employed, which was above 60% some years. So that's very, very impressive too. So what I've got here is the chart, one for the last half year or so, half year. So it says 1 year, but I actually made this 6 months. And we've definitely seen the company's share price in an uptrend. And the share price did end up as at an all-time high at the end of closing on January the 5th at $10.51. So it looks like if it remains above $10, I think $10 will be a very natural line of support moving forward. If it moves back towards $10, I would actually think about buying into Nick Scali. And I think that's a really positive sort of price support level. And if it falls below $10, that's an easy sell. So I'm hoping the share price retreats back towards that $10, and that would be a buy in my books. So that's all I've got on Nick Scali moving forward. So I hope you've enjoyed this video. If you're a Nick Scali shareholder, congratulations. You've probably done very well holding this company for a while because of the share price has closed at the all-time high. You're in profits. If you're not a Nick Scali shareholder, you're like me and are very impressed by this company, maybe you can buy into this company in the future. So the whole point of me doing these videos is to give you ideas and for educational purposes, research purposes, that sort of thing. So I hope you've enjoyed this video. Now, again, I'm not a financial advisor, so if you do need financial advice, make sure you seek out a qualified financial advisor who can speak to your own financial needs. That's all for this video. Have a good day. Bye.